I agree with Jay Powell that we should have another rate hike this year. We want to get those rates up. But typically what happens is we're supposed to say don't fight the Fed and don't fight the tape. Raising rates means you're not supposed to own stocks or you're supposed to lighten up. The tape, obviously, very bad today. And that was something the late Marty Zweigel taught us, and I think it makes a lot of sense. But rates are still relatively low, but they're any bit higher, and we're starting to see what the different shocks in the system. And what you really want is a Fed that says, wow, you know what? This may be a little too fast, too much. Now, I know the president said that. That puts Jay Powell in a box because the president doesn't. I wish he didn't comment on it because then Jay Powell obviously feels he has to exercise independence. But when you have a rate cycle that goes up, what you're really hoping is that the Fed does it slowly and deliberately, and that allows stocks to go up. I don't want the Fed doesn't. Well, I don't want the Fed to mandate stock higher prices. That's what the Chinese do. It seems like a fool's game. But I do want to say, listen, it's disconcerting. But as everybody gets disconcerted about it, I get less disconcerted.
We do want to point out that we are at fresh session lows right now with the Dow down by 478 points. That's good for a decline of 1.8%. The S&P 500 is down by 1.8%. 2828 is the level. Is damage being done to this tape?
Yes, definitely. Definitely. And I think that it's very difficult to have a situation where the Fed says, listen, we're willing to overshoot. And what that says is, listen, a lot of people just say, I got to sell. Now, I want to, longer term, I think you're really crazy to do that, okay? Because I think there's so many things that are good. I understand you're going to have a guest that talks about 1987. I was in cash for 1987. I was in cash for the crash. So maybe I have some ability to opine on that crash. And I would tell you it's nothing like that. The stocks aren't nearly as expensive. We don't have a policy that is of insuring portfolios so that all of a sudden you have this kind of lockstep decline. Sure, we have ETFs in the system, and Bob Pisani talks a lot about how they can accelerate a decline. But look, the economy is pretty good. It's just that I don't think it's as good as Jay Powell thinks. And I say that because of things like PPG, came on here yesterday, a little company called Trinseo that's involved with lots of different kinds of plastic building blocks, liner board coming down. I don't see a lot of sectors that are doing well. Housing properties are actually coming down. My house is going down in value.
Yes.
Many people's houses are going down in value. That's not the time when you slam on the mortgage. You don't go to 5% mortgage just when your house is losing value because it's just going to lose more value. Not a lot of houses are trading yet. They'll trade lower. And when they do, Jay Powell will look back and say, well, I didn't mean to do that.
Is there any risk that the decline in housing values could do to the market what it did in 2007?
Fortunately not, because the loan to value that people have in the FICO scores are much better. So I don't want to conflate those two. It would be wrong.
And the capital positions of the banks are better.
Yeah, okay, arguably the banks, you're going to hear, we didn't have as much lending because the balance sheets of the consumer are so good. But you know what? We have to separate the consumer economy, and we're a service economy, I admit, but also from when you look at there's many different categories of employment. And some of them have very much weakened. And when I see linerboard, which my father sold linerboard for years, that's like the basic build, like shipping, okay? That's showing genuine weakness. Now, I also always hear from the bull, the guys who are saying, hey, listen, Jim, you got that wrong. There's too much capacity coming online. Well, these guys are not knuckleheads. They put on a lot of capacity because things were booming. They're cooling now. The tariff, the retaliation by us, it's cooling things. The sentiment can change. It's always fragile. Any sort of economy can be fragile. And when Jay Powell said what he did, and Amazon raised wage, Amazon suddenly is the minimum wage setter for the United States. I don't think so. But what you have are people say, listen, I got to get out. And I feel it's bad. And I don't want to scare people because I think it can be reversed. It can be reversed.
Well, we're now seeing all three major indices, their worst day since April.
Absolutely.
What about this is a surprise? I mean, inflation, emerging market weakness, rising yields. Is any of this such a big surprise that it would be driving this kind of a fear factor?
78-cent, wage hike year over year. I mean, we got these big tax cuts so workers would get more money. So, I think it's a shame that Powell thinks, and there are other people who come on our network and say, look, this is really run amok inflation. I think it's a shame that we shouldn't allow people to get jobs and make more money. This isn't my old shop steward lefty thing. I just really feel like, hey, listen, it's not as dangerous. But that's why he's raising. But how about this? What would Janet Yellen do? What would she do? I think I know what she would do. I think she would listen to programs like this and listen to what's happening in the marketplace and with housing, and she would listen to what's happening in industrial. She'd listen to what's happening in construction and in autos, and she'd say, you know what, I've raised rates, and now let's see what happens.
Let's pause.
That's what Janet Yellen would do, and I really miss Janet Yellen. I miss her because what she would do is say, you know what, I need more inputs. I'll look at the market. It's down 500 points. Maybe we should make some calls.
Yeah.
Maybe that. What is that PPG? Let's look at that. Where does that go? And you know what she was doing? She was a student. Okay, she was a student. She wasn't a teacher. She was a student, and she learned from many people. And she had no hubris, and she was not a rookie. And I don't like what's happening at the Fed because the Fed has decided, like Ben Bernanke in 2005, we got to put a stop to this, even as they knew absolutely nothing in 2006.
So here's a question. If one of the chapters in the lesson book is the company conference calls during this earnings season, and we hear more company conference calls like PPG where they're talking about rising input costs. We heard it not just from PPG. We heard it from Pepsi and Procter & Gamble on steel. Does it make Jay Powell less or more likely to raise rates? Because you could look at it both ways. You could look at it as this is slowing the economy down. This is a real impact on the stock market, and we're going to step back. Or you can say it is inflationary. We have inflation to fight.
Well, I have Barry Sternlicht on today. He knows more about real estate than almost anybody in the world. And he's saying, listen, steel costs have gone up so much that it no longer pays to build.
To build, right.
And now that's, you know,
Lumber,
now is that, does that stop the economy? Well, how about Jay Powell? Jay Powell should watch the show tonight. No, but I mean, these Fed guys, I mean, Janet Yellen used to get every input, even if it's as Lilliputian as what mad money is, okay? But, you know, you got to listen to Barry Sternlicht. He is saying the steel's already slowing because it's not worth building. The smarter guys are saying they're pulling back, not worth building. That's a man-made problem. We're trying to take on the Chinese. When you take on the Chinese, there's casualties. There's collateral damage. There's a 489-point down decline in the Dow, and a lot of that's collateral damage to what the Fed wants to do. And by the way, I hear many people say that Peter Navarro is not in charge. They're fools. Those who say that he's not in charge do not do enough homework to be in the room.
Because he is in charge.
Homework.
He's driving it.
Very much in charge because the president has had it with China. He's told me so many times. And in 2005 and 6, he told me he had it with China. Well, now it's only accentuated. So I think that some of it is man-made. Yeah. Look, if we had more oil, we did the Iranian sanctions. That caused oil to spike. Now we don't have enough truckers because we changed the rules. You can only drive 50 hours a week. If you speak to Ingenuity, you speak to the people, Hugh Johnson, a lot of what's happening in inflation is man-made. So it's not going to stop if Jay Powell, look, Jay Powell's using a sledgehammer. I think if you step back and said, well, let's see how we're already doing.
How many interest rate hikes? How many interest rate hikes is the market pricing in for next year? We know they're pricing in one more this year.
Right.
Is it 3 or 4?
Well, I think that the decline will accelerate if Jay Powell doesn't walk things back.
Doesn't walk things back.
But you see, the problem
doesn't listen to the data.
Here's the problem. Let's say I say you have to get out now because he's doing the wrong thing. Well, what happens if he says, you know what? I do want to, I said some things last week about overshooting, and what I really meant to say is I don't want to undershoot and I don't want to overshoot. Then suddenly we have a big rally, and people say, why did that clown Cramer come on and say to sell everything? I'm not saying that. This fellow's going to come on in 1987. I mean, you know what? When I went into cash in 1987, it was because the second worst week in the market's history was the week before the crash. And I didn't want to be in it and have any more exposure. And so I look at what's happening now and I say, it's not 87. This is like the beginning of Anna Karenina. All happy family, all bull markets are alike, and all sell-offs are unhappy in their own individual way. This is one that's got a lot of man-made. I love Tolstoy. I took a full year of the son of. I took a year of it. He was a fabulous writer. But you have man-made oil. You have man-made wage inflation to some degree because we lowered taxes, and you have autos that aren't selling. But Phil LeBeau would tell you that can change. And you have a tariff. You have a tariff. Let's call it skirmish, like Jamie Walt on Friday. I love these first. How much Cher, Jamie? There's not a lot of first name people in the world. So you have all these things, and you have a panic. And I always say the same thing, which is that nobody ever made a dime panicking. And if you're thinking about your 401k and you haven't made a contribution, you're going to do it year end. You know what? Maybe do a little now. Maybe do it a little this week when everyone's panicking. Because maybe Powell changes his view, or maybe oil comes down, and you'll say, why did I do that? Why didn't I think more like Warren Buffett? Why was I looking and saying, oh, my, it's down? This guy who's going to come on, the 87 guy, remember, we closed down 508 points that day, and we're at 506, so, it's going to ring true, except for that was it.
The bigger percentage point
down from, we went from 2,800 to 1,400, in a couple of weeks.
But
it's not like that.
There's been so much optimism here. And I mean, I guess to quote Mark Twain, it was the best of times, it was the worst of times. What are you seeing in terms of, I just wanted to get some literature.
It's kind of like Dickens. I think I'll go with the Dickens on that.
Go with Dickens. We'll give you the Dickens.
Dickens was good. Dickens was like Stephen King. People don't realize that. He was the Stephen King of his day.
I did not mean Mark Twain.
I'm not kidding.
Yeah,
Okay.
At any rate.
Well, the reports of the bull market, death of premature. I don't see a lot of optimism. I see a lot of people want to scare the bejesus out of people. Yeah. I'm just saying, look, I have been saying night after night, cautious. I mean, I went out, it's like hey, listen, it's going to sell off.
I'm asking you, though, I want to know what the bright point, we're looking at the Dow down right now, 500 points. Where's the bright spot?
Well, the bright spot is that we are not racked with inflation, even if Powell says we are. And also, earnings can get better. They don't just have to get worse. We just need some of the raw costs to come down. And by the way, let's just understand each other. The market has been up a lot, okay? So it's not like this is the end of the world. If you drop a zero and we're 20, let's say we really are at 2,600 on the Dow, are we going to go to 14? No. We can sell off and maybe things will cool off. And by the time we get into earnings season, people might say, you know what, that stock is down so much. They told a decent story year over year. You know what, I'm going to go buy, I'll use the worst example, Ford. I think this quarter is going to be horrendous.
Of all the companies you choose,
I picked the worst. I picked the worst. Why not start with the worst? I could have used Micron. Right. These are companies that are selling at 5 times earnings and 4 times earnings. Ford, I don't think will cut a dividend. I think Ford's going to have a horrendous quarter. But then after that, I think that they could do better. They'll take the charges, maybe only make good deals. Micron, it's told you they have an inventory correction. There's too many chips in the system. So after they go through and have 2 quarters of inventory adjustment, then you're going to say, wow, they're buying back $10 billion worth of stock. Remember, they are cash flow positive. These all the negatives have to happen before the positives.
Let me take you back to, what was it, 2007 summer?
Sure,
when was the famous rant? 2007 or 6?
She never wore that dress again.
She never wore that leopard, the giraffe dress.
It was like a giraffe. When did you put that giraffe outfit on?
It was a giraffe dress. Yeah. And you were very, very critical. And you were early,
and
then
the next day they made fun of me, off his meds, all that stuff.
You were right.
It was good to be right.
It was good to be right. And you were very critical. You were very critical of Bernanke. He's not. The guys I'm talking to, he doesn't know what he's doing. They know nothing, right?
I mean,
Sergeant Schultz. But are you at all close to that point now with this Fed and this Fed?
I think this Fed, it's very easy for him to take it back. They raised 17 times before. Bernanke wasn't talking to any of the brokerages. He wasn't talking to anybody in real estate. He wasn't talking to any hedge funds.
That was your point.
He said, listen, we have to raise rates. And there were plenty of people who came on and said, it's so overheated. He has to raise rates. And let's just put the blinders on and raise rates until we hear ouch. Well, we were going toward a precipice. We were sent over a precipice. Years later, when the actual transcript came out, I was a laugh line in the Fed, and that's okay. I mean, I've spent my time on the cross, and that's okay. I've been around for a long time. But sometimes when you really feel emphatic, you do have to shout it from the rooftops. I was not yelling. I mean, I had a Today Show experience where someone said to me, aren't you yelling fire in a crowded theater? And I said, yeah, but you see, there's a fire.
Yeah.
There's no fire here, so I'm not going to yell. I am going to say that we will find, if Jay Powell says tomorrow, he gives a speech, he goes, you know what? What I really meant to say was, geez, if it really slows down, I'm obviously not going to raise forever. Then what's going to happen is people are going to say, why the heck didn't I buy ServiceNow, whatever the hell that is? Most people don't even know who are selling it. Mm-hmm. Why didn't I buy the ETF that had all those high flyers in it? Because most people don't know what Adobe does. But then you'll feel like you should have. And, you'll feel like, wow, why didn't I buy Disney now that they've solved their problems and ESPN's doing better? They'll look back, and I don't want to be the guy that says, you know what, it's 87, and it is really coming apart. And by the way, can we remember that in 1987, the economy was actually quite strong? It was just the stock market that fell apart. Here we have a lot of buybacks. We have a lot of good things going. We have a Fed that is very worried about its shadow and wants to prove its mettle. And against that, we've got higher oil, and we've got king dollar, and we have a war with China that is really us fighting back. And that's going to cause the market to decline a little. But once it goes down, do you think that there won't be some bargains? I think it would be tragic if people just said, you know what, get out now. Instead, look, I have some money that my dad left me for my kids.
I'm going to go add money to my 529
I just added, I've been trying to get through it. Geez, dude. brokers. But I got some money from my late dad, from my kids, and I've been waiting for a break. I bought some. He told me, he said, put some money to work before he passed away. And then the rest I kind of kept on the sidelines at S&P. I'm not allowed to own any stocks. So I today added because I was going to wait till the end of the year. I both put some money of theirs to work. They don't watch the show, don't worry. One of them, I think, doesn't know I have a show.
Yeah.
But that's all right, because my wife's never watched.
Fascinating conversation.
My wife, frankly, who's in real estate, has said, listen, if you're in New York real estate, get out now. And I said to her, I'm in New York real estate. I can't get out now. Paul Manafort's house, by the way, is 5 houses from my house. That's for sale. He paid $5 million. I say we bid him 1.5. But yeah, I mean, New York real estate, and Barry Sternlicht will talk about, is very bad.
And that's tonight.
Yeah.
And that's, and I wish it
Sternlicht
weren't, because I'm long New York real estate. But then again, what am I supposed to do? What my wife said is we should sell and then rent. I said, I haven't rented since '84.
Good luck trying to find an apartment. All right.
There you go.
Yeah.
But you know what? A year from now, you're going to be saying good luck trying to get rid of an apartment.